Hi, Bill Wagner, Mortgage Market Guide. Here we are on a Thursday doing our end of week wrap up. And thanks for tuning in. So, the theme for this week is the Fed is pushing everything higher except rates. So let's kind of break it down. First off, the coronavirus came in and created, the biggest, economic shock to our country in its history, right? We had a 33% on an annual basis decline in the second quarter. The recession is over, but the stimulus is never ending. And that's what we call the policy response. What the Fed, the Treasury, the administration is doing is unprecedented and will continue. And so, with that, we're seeing the markets, especially this week, go just everything has gone higher. Stocks have gone higher. The NASDAQ at all time highs. You can see it 11,000 here, the Dow over 27,000. Just remarkable. Precious metals, gold, silver materially higher, oil higher, bonds higher, right? We're seeing bonds, if you look at the chart, a little blip here on Wednesday, but right near 2020 and all-time highs in mortgage-backed securities. The 10-year note also at 51 basis points, as of yesterday. We're at 52 now, after a little bit of an uptick yesterday. But those are all-time closing low yields in the history of our country. Remember, we dipped beneath 50 basis points back in early March in the darkest days of COVID. And that's when we had that incredible volatility. But we never closed this low on the 10-year note. So we are seeing historic low closes and interest rates. And it's unbelievable. At the same time, we're watching jobs come back, right? The initial jobless claims were, a nice, the number for this week wasn't particularly good, but it was offset by a multi-million job increase for the previous month. So the market is thinking there will be another increases going into future weeks. Now, tomorrow we have the jobs report. We don't know what that number is going to bring, but there's reason to believe it should be okay. It'll be, especially with the revisions, the backward revisions from the other number, it'll be interesting to see. But the response could be volatile, and that could change things. But what we are looking to is next week. We had the Treasury this week announce, and the reason for Wednesday's decline, that they are supersizing the auctions for next week. What do we mean? Well, they're adding more bonds to be sold to auction next week. Why? Because of all the stimulus, right? The Fed and the Treasury, there's so much money getting thrown at this that we have to continue selling paper. So the bond market has to deal with an enormous amount of supply next week. The mortgage-backed security market also has to deal with an enormous amount of supply next week. And then, of course, we have a couple of reports. We have some inflation gauges coming, which, again, the inflation is the driver of long-term rates. Right now, inflation is non-existent, running at 9/10 on PCE. That's less than half of what the Fed wants. And I think that the Fed, the quote that I've seen out there that I think is something to share with clients is the Fed is not even thinking about raising rates. And so it's just not happening. Rates will remain low for the foreseeable future on the low end of the market. That means all the home equity lines, auto loans, credit cards will have historically low rates. And then I think what's going to happen is they're going to come back in with this yield curve control in the months ahead to further, tell the market that they are committed to keeping rates low for a very, very long time. So that will make a great backdrop of the country. And when we look at the economic damage that we mentioned, it will take years for that to be repaired. I mean, virtually years to get unemployment back to 3.5%. That's maybe 2 years down the road. So the Fed, the administration will continue to do whatever it takes to get there. So that we in housing, though, will continue to benefit from the low rates, the continued improvement in the economy, and benefit from low rates also from the underperformance of folks around the globe. Remember, rates are negative around the globe, and that will keep our rates low for a very long time. So great backdrop. I hope this finds you well. Have yourself a great weekend and be safe out there. Bye for now.